Cutting edge guests, awesome, uncensored, jaw-dropping information, plus funny memes, good deeds, and loads of laughter. Kind of have it all. Ladies and gentlemen, if your soul's awake, then welcome, because you're in the right place. Welcome back to Send It Sunday, you divine lions and lionesses. $8,000 US per ounce gold. Is it going to happen? Absolutely. I'm going to be showing you the deep dive on all of the research, the publicly available information as a historic squeeze ignites gold and silver frenzy. I predicted this 2 months ago. I was off by 8 days in October at 4,000 an ounce gold, $50 per ounce silver. It went to 54 and gold went to 43.86 on the US exchanges, and now we are looking at $8,000 per ounce gold. So what has happened? I've been waiting for the data to prove itself out publicly so you can see now with India revaluating at 10-1 gold and silver. That makes silver today at $500 per ounce. So stay tuned. Join this live stream. I'll be discussing the backwardation of gold, silver, precious metals, and the entire market globally are under strain. Suppliers cannot meet the demand. Refiners are lagging by 2 months, and we are looking with de-dollarization accelerating gold to be $8,000 an ounce, likely by February. See you soon. All right, welcome back, everybody. All of you sovereign souls, you divine lions and lionesses. It's Sunday, November the 9th, right now at just 5:07 p.m. Eastern Standard Time, and welcome all of you. It's pretty amazing that we're just 8 weeks and a little bit from the new year. And this has ramifications, this information, for everybody all across the world, all across the world. So this $8,000 per ounce gold, that may sound shocking to you right now, since it's trading at a little over 4,000 US per ounce right now, Sunday, on spot prices. You're going to hear why it might be 27,000 to 55,000 an ounce as well. And these are by very notable figures in the financial sector. And then why? So do me a favor, grab yourself a pen and a piece of paper. And I want you to just write down 2 years ago, this very day, where were you, right? Just whatever comes to mind. And then on that day, you can figure out or go to our gold chart at buddhalovesgold.com. And you can see on the gold chart, take a look at where gold was, and then figure out where silver was, okay? And look at that, like write it down, where you were. Because I want to show to you, because speaking things, we are visual beings and then auditory, but having it written down is like journaling. There's power in translating thought into motion, action, right? So you have your thoughts, actions, feelings equal results. Now, again, historical data. So why am I excited about this, right? Well, you already know here on the Sovereign Soul Show, since our creed is love, levity, and liberty, and the O, I've got the heart, and the I in sovereign, we have Archangel Michael's sword also across for Yahshua, ready to be unsheathed and to come out and to bring righteous justice to the world. And then for soul, the sound of unlimited love, as far as I'm concerned, which we all are eternal spirits and beings, we have the tree of life in the sovereign soul. Now, yeah, been a Reiki master over a decade, practicing 25, never took a penny for that. It was mostly for myself and then also to work with animals. And I was very blessed to work with some Mustangs, BLM Mustangs, other horses as well. I truly found it incredible. Some cats and dogs, I loved it. And I still do. I still practice Reiki every single day. And you already know from the background, I've also been a Canadian infantry soldier, which I thought was a country, and it's not. There's not a shred of evidence that exists that Canada's ever been a country. That's from the National Archives, December of last year, 11 months ago. 3 people, full-time, 2 weeks, sent out a 10-page letter. And then also I've been a wildfire fighter, hopping out of helicopters in Ontario and the Yukon. Best job I've ever had. Is amazing. Now over here, you see the Bling Buddha. The Bling Buddha is our mascot, and yes, he's laughing and he's firing, pills of awakening from his 9mm. He's got that Punisher's tattoo over his left breast, symbolizing save the children. And Yes, he's got the lotus flower symbolizing life in his right hand and the dove of peace on his right shoulder. What's hanging around his neck is gold and silver. So 4 seasons of the show, the Bling Buddha, gold and silver. And yes, it's an XRP token that actually is on the silver chain. And I've got my piece of silver here. So here you are on November 9th, because the trajectory of the financial world has already shifted over these last several months. And what you are seeing now is an economic financial Armageddon taking place right now. And it's very beneficial to us, not really most of the institutional banks that have short positions right now, because those banksters who caused the 2008 and the dot-com bubble, we all know, was propped up by the Rothschilds, the demonic bloodline families, right? I don't have any hope for them. Like, hey, you know what? You made your bed, you lie in it, you have crushed people's lives, you have caused massive financial disruption for generation upon generation upon generation. I'm not sorry that you're going through this. This is an opportunity for those of you, me, others in the world to just see wealth beyond your wildest dreams simply by having, a couple 100 ounces or a few 1,000 ounces of gold, silver, right? We're going to get into the nitty gritty here, because I only just, I worked out this morning, awesome workout at the gym, and I showered then, but then I've just been sitting at the laptop after a quick meal, once again, pulling this all together for everybody. So it's very, very powerful. You got that pen and paper, November 9, 2 years ago, 2023, where were you? And then what was the price of gold and silver, right? And if anybody wants to know that price right now, I will just show it to you here on a chart, and I will pull that up for you so you can take a look at it. Actually, you know what? We're going to hold the chart off for a second, because that's going to be a reveal. You already know it's at 4,000 an ounce right now. Let me take you back to the day, back on this gold chart. Here's my charts, and we'll get her done. Now, as I'm waiting for this gold chart to be issued, I got a pop-up that came on the menu. You can't see this, but obviously I'm doing this live for all of you. There's no producers, right? And I've been doing this show for 4 seasons now, so we can warn the world as to what's coming, globalism, and then also what measures you can take to prosper in the meantime and also save your family. So let me just jump it in here. And everybody can punch this in. You can put in the chat. So the gold price closed at a high of $1,965.69, 1965.69. Write that down. All right. That was the gold price on November 9, 2023. So what's the silver price? November 9, 2023. It was $24.52. Okay. $22.52. All right. Everybody got that? Okay, good. Right on. Glad to see all of you here. We got Red Deer, Alberta. That's awesome. Todd afternoon, I guess. That's great. I'm trying to stock up. Said in the chat. It's awesome. Greetings from Denver. Fantastic to see you here. Rhino Hunter. It's awesome. Everybody coming into the chat. So yeah, you can put in the chat where you all from around the world, because this has, again, it's global effects for all of you spiritually awake A-player patriots. Golden age right here. And if you just come on, I'm going to be showing you where you have some of the most brilliant financial minds of our time saying it'll go to $27,000 and could go to $55,000 an ounce. And I'm actually going to show you the date conservatively. I will show you with math proven once again that gold can be $8,000 an ounce. So you're going to see that date right here on the show, the graphs, the actual math, everything that I've plotted here for you. Why have I plotted that? So back in Canada, you all know that I was born and raised in Ontario. And then I was selected for the honors economics program at Wilfrid Laurier University, which back then in the 90s was called the Harvard Business School of the North. So in Waterloo, Ontario, which is where Wilfrid Laurier is based, and also University of Waterloo, which was literally called the MIT of North. And, they're only a few blocks away from each other. So you have the greatest business and economics school in the nation at the time, Wilfrid Laurier University. And then you have the greatest math and computer science school in the nation at the time, University of Waterloo, right beside each other. So no coincidence then that I eventually got hired to research in motion BlackBerry, which headquarters was right between WLU, Wilfrid Laurier University, and backed onto the campus at at University of Waterloo, the engineering building, which is where Doug Freegan and Mike Lazarus, the co-founders of RIM BlackBerry Research in Motion, then they had BlackBerry product, you all know, as they said, you put the refinery next to the gold mine. So Mike Lazarus gave that speech in 2000 when I was on board with BlackBerry in 2001, then also expanded. So I was like employee 365, which is amazing in the days of the year, right? And then by the time that I quit and I left 4 years later, grown over to 5,500 people. And we were only in 2 countries. We only had an office in Canada. When I started, BlackBerry had just come onto the scene. And then when I left, 5,500 employees on all the major continents. We had offices on the continents. We had manufacturing over Europe, and then also opening manufacturing and facilities and distribution centers in Indonesia, Asia Pac. Incredible. And Middle East, EMEA, Europe, Middle East, Asia. So I had this mathematical background. You might look at me like, yeah, Brad, I heard about your sister. I know she got more brains than you did. And Braun, that's absolutely true. She's freaking brilliant, Mensa level. So I went there for honors economics. And again, what you need to do is you look at everything from a math standpoint, and they like to apply psychology and social conditionings and whatnot. But basically, economics is pretty simple. This supply, demand. So let's just say that you're in the desert, you got a lemonade stand, right? This is simple for everybody. I'm trying to bring everybody along here as I'm building this story, about to show you all of the empirical evidence and statistically significant information where gold and silver is poised to go based on indicators right now, based on some of the largest information, central banks, as well as governments and what they're doing right now, just over the course of the next 60 minutes. So imagine you're in a desert, you got a lemonade stand, here's supply and demand, right? And you've got 12 people walking through and everybody's water is run dry. And that lemonade stand has a liter of lemonade and everybody has $100. Somebody might have 500 and they're thirsty. And maybe they're like from China, those a-holes, disgusting Nazis who, slaughtered the ostriches that we all saw. They're about to do that to Canadians now too, unfortunately. But we're doing things to try to take care of it, right? Financial is one of them, everybody. And then all of a sudden they come up there like, we're thirsty. And he goes, great. I got 1 liter. I only sell it by 1 liter. It's $100. And everybody goes, I got 100. I got 100. And somebody goes, I got 500. Where is that for-profit business operator going to sell that 1 liter bottle, right? Extreme example, but that's supply and demand. Well, guess what? 1 of a supply a liter. The demand is equal across everybody. 11 out of 12. The 12th person has $500. Boom. It goes to the $500. And that's it. Packs up his lemonade stand, goes back to his village. That's where we are right now. We are at the tipping point of financial history, even though it's already been made over the summertime. You are seeing it play out where you have China getting back to London, getting back at the Brits and the monarchy for the Opium Wars, who play 20 generations out. The Chinese strategy, their empirical strategy to take over goes up to 500 years out. And that's happening now. You're about to see it. So now everybody has written down where they were on November 9, 2023, if you can remember, but at least you've written down that the gold price, then what was it? 1969, $1,969, November 9, 2023. And the price of silver, spot price US, was $24.52. So let's continue here. So just as you saw, we're in a historic squeeze, a silver squeeze, which has ignited a gold and silver bullion buying frenzy. For wherever you are in the world, everyone, you want to buy bullion. You don't want a fancy little freaking coins that have images of people or birds or whatever on it. You want the most easily liquidatable asset, which is pure or 0.99% purity of silver or gold. Same thing with platinum, palladium, bullion. Right? Who cares what it looks like? Because aesthetically means nothing. Because all they want it for is to smelt it, trade it and make sure that it's easy to get out there. And also it would have a nice stamp, 0.999%, and then also where the refinery came from or the mint that you're holding it. So again, on the thumbnail, as you saw in the intro, financial Armageddon ensues as central banks gobble up gold and silver bullion. Suppliers are strained. I'll be sharing that with you. And markets are screaming at scarcity. So tomorrow, the opening of the markets are still starting to open in Asia very shortly in a few hours. You are going to see the price elasticity of something and the pricing elasticity of something else. These stupid throwaway terms, but it is an economical term as well, which has incredible effects upon the market. So let's just take it back to what President Trump has been doing incredibly along with the Trump administration strategy. This is from Spiritual Street Fighter 17, gold shall destroy the Fed. We've seen it consistently from the US debt clock. This is President Trump posting on True Social. We saw this months ago. The golden age. Golden age started. Golden age is here. He has said that during his campaign, during the dash, all the way up to being elected for presidency just a year and a few days ago, November 5th. We just passed that. And take a look at April 20th of this year, his post on True Social, the golden rule of negotiating and success. He who has the gold makes the rules. All right. So let's talk about the systemic stress which is going on in markets, that there's literal blood in the streets, metaphorically speaking, from a financial standpoint, because it's in silver. So the London LBMA, the London Bullion Market Exchange or Association, I almost got that confused with COMEX, association, was started in 1850 by 5 families. And yes, the Rothschilds were one. And so now the LBMA it's projected to be out of its silver inventory by 2028. But guess what? That was in May this year, those projections. I'll show you a little bit more about that, because now you're going to see why it's not really mind-bending to believe that $8,000 an ounce gold is on its way and it's almost here. But real quick, 1717 now, how perfect is that? I just saw. Real quick, here's a message from President Trump about gold.
Is better than cold, hard cash.
We all know what's happening to the dollar. The dollar is going down, and it's not a pretty picture, and it's not being sustained by proper policy and proper thinking. This was an opportunity, and maybe an opportunity to show people what's happening with the dollar so that we can do something about it.
All right, so there you go. So what we've seen from President Trump and his strategy, remember, this is a man with 172 is shoving his enemies out into the spotlight and letting them implode on themselves in public, right? So what we have from the LBMA is a short squeeze that ignited that precious metals, gold and silver bullion buying frenzy. Bullion, emphasis on bullion, right? So it's went berserk these past 2 weeks, whether it was lease rates that were like 3% to 10% to 27%, now on Friday up to 100%. On holding. So we also have supply chain problems and backwardation. I'm going to break each one of those down so you have a comprehension and an understanding of what backwardation means. But what you're seeing at institutional level and hedge fund level is backwardation is being used to hedge against the institutional defaults via short positions. So for example, TD Bank out of Toronto, right, fully implicated in hiding Sinaloa and other cartel money just this year. And also part of a RICO investigation launched under the Department of Justice years ago for doing this, even though they're trying to scale down the potential on silver and gold. They just lost millions in their short positions as soon as silver hit $48 an ounce. So remember, whatever you're listening to in the market, you have to look at just like, is it a Pfizer-backed study? Well, 100% of the doctors hired and paid by Pfizer agree with Pfizer's findings, right? So look at who it is that might be putting that information out there, because also look at their positions where they are in the market, which you can go find if you really want to. So we also have disastrous de-dollarization. So for example, since 1913, when you brought in the US dollar, that Federal Reserve note, which is nothing federal, there's nothing reserve about it. It's not backed by anything. It's not backed by oil, gold, nothing, no minerals. It's all a printing press. We've already covered this. And under the 1913 Act, you had the IRS, the FBI, the ADL and the Federal Reserve Board established. The FRB created central banks, Central Bank, the United States, US Treasury, Central Bank of Canada, Bank of England, boom, 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 boom. All these central banks around the world, they print money, they send it to them. They say this is our dollar. They try to back it against the US Federal Reserve note. They jammed it down the Americans' throats. They did the gold buyback, forced by law at gunpoint for all the Americans in the early recessions, 1932, to give them all their gold back. Or, as the then president said, if you don't, you'll be thrown in jail. But we'll so nicely buy your gold at a preset price of $23.50 an ounce. You give it to us, the government, we will give you these Federal Reserve notes. That's where we're going to. And oh, by the way, you need to sign up for Social Security that you've never really needed to have, and create a Social Security number, which is registered on the exchange. It's the City of London, and you're traded like chattel. So you see what they did there. They took the gold. And by the way, in December of 2023 or 1933, the American government, we know who they were run by then, repriced gold at 32 an ounce. So they stole the gold from the people for 23, forced it, and said, if you don't, it's jail time. So stole it at the end of a gun, because they just write these laws. And then they repriced it. And then they also went out from a trade standpoint and went, anybody who owes America, the government, money, you owe us. You must pay us in gold. But from now on, we're paying you in US Federal Reserve notes. So that's how it happened. I did a whole show, about 90-minute long, 2 years ago, breaking down that tyranny, right? So now you're seeing the reverse of this effect that Trump is bringing around, and some of the other things that are happening with it. And by the way, if anybody's on BuddhaLovesGold.com right now, you can go to this chart, because it is for the next 3 weeks only. It ends on November 30th. You can get, if you're in America, you can qualify for literally a chance to grab 11% and free silver match. So that's, you can scan the QR code that's over my face. You can go over here to this screen as well. And that's where you get your free gold silver kit. And if you want to move into precious metals, and I would assume that everybody who is going to want to right now, physical gold and bullion by the end of the show, all it is free. But here's the chart. So you can look from 1913, when they started tracking gold after the Federal Reserve note, and all the way until 2025. Now this chart is 2 months old, right? So it missed the $4,368 per ounce that gold hit just 2 weeks ago. So it's over 4,000 on this chart. So you're going to see this right here. Jump on that. You can call the toll-free number. They're open Monday to Friday. Actually, they even started on Saturday answering calls, and ask them about 11% match for qualified buyers over 10,000. That's where they are in the US. So continuing on here, let me take you to the charts now. And well, actually, I'm going to show you the news clips. All right. So starting in Canada, right? So again, even though we've got this like trade tariff war, Trump's not going to be talking to China and carnage and all of the people who own Canada. Just like Carney said on his first visit 2 months ago, I've spoken to the owners of Canada and they're unhappy. Full clip right there in the sitting room beside Trump at the White House, full on for everybody to see. I spoke to the owners of Canada. So again, puppet, right? So BNN, Business News Network, Bloomberg, Canada's on the verge of a recession. So by Michael Davenport, senior economist at Oxford Economics, joins BNN Bloomberg to discuss Canadian GDP numbers. What do you need to know? It costs you, for a chicken, it costs you $35 Canadian at Costco for a freaking chicken. This is October 31st. So you can see it right there. That was Halloween. And we have moved way on from Halloween, even though it is November the 9th. So let's continue on this. So here's a conservative that gold will be $5,000. All right. I'm going to read to you what I've highlighted here in this little clip. You can screenshot it. But this, again, I showed in September on the $4,000 per ounce gold. And so remember, in September, gold had just crossed 3,000. I said by October, what first? Gold will be 4,000. Silver is going to be 50. And guess what? I was a little bit wrong. It was a few days off. 8 days later, in October 8th, it crossed $4,000 and then went up. And then silver finally hit 50 and then 54, right? And so you've got the pullback. We're going to talk about the pullback too, and I'm going to show you that why it's nothing to fear And you're going to get it from one of the best and brightest minds as well as I report this to you. So what it says here, and this is in September, $5,000 an ounce gold. Gold remains our highest conviction long recommendation in the commodities space, adding that we estimate that 1% of the privately owned U.S. Treasury market, if that were to flow into gold, the gold price would rise to nearly $5,000 per troy ounce, assuming everything else is constant. Then it goes in the last paragraph, gold's rallied this year, climbing from 2,500 an ounce 12 months ago to 3,600 today, and giving gold a 24 trillion market capitalization has come alongside a Bitcoin price boom that sent Bitcoin, sometimes called digital gold, to record highs. I personally don't advise holding or owning anything like that in crypto if it's not backed by anything. That's why gold and silver, right? If you physically own it, bullion, make sure it's mailed to you at your home. You can touch it, feel it, or you have it in a depository. Physical bullion. Repeat after me. Write this down. Physical bullion. Put it on that piece of paper. Physical bullion. Nothing crazy stamped. It looks like this. It's got an eagle. It's got a loon. I don't know. Bullion. That's it. The easily most tradable and liquidatable, because it comes at a point in time you need to liquidate it, go to cash for something that happens in your life, or you need to liquidate that, put it back onto an exchange, silver, for example, to go to gold, or vice versa, or liquidate part of your gold and go into platinum, whatever. It's something that is easily digestible by the exchange, so they don't have to go out to another gold broker to find a way and go, oh man, it's these freaking shiny, crazy coins, and it's got a picture of Elvis on it. Love Elvis, let me tell you, but that's not going to help you, and there might not be a big market for Elvis stamped coins, so you can liquidate it to move into something else quickly. You need to be able to move fast and be nimble, just like Jack, right? Jack be nimble, Jack be quick. So let me talk to you about the USA. I showed this 2 months ago. Gold Telegraph in September 11th said that breaking news, Switzerland is proposing its gold industry builds a refinery in the United States. Boom. The United States is starting to understand the power of gold. Well, they already did. Great guy, Gold Telegraph out of Canada. But the one thing about Switzerland, too, is that the largest refinery of silver in the world, in Europe at least, is in Switzerland. And they have announced that there is a 2-month delay on silver because they can't keep up with the demand. So ANZ Bank, Australia, New Zealand banking, talks about silver's perfect storm. And what you're seeing here on the screen, silver's perfect storm, there are record shorts, depleted LBMA, London Bullion Market Association, right? And the ETF surge. Now, folks, this was in March 21st of 2025. So all you sovereigns, this is in March 21st, 2025, that they were reporting this. And as it says in the subtitle, bank says there are increasing risks of a short squeeze in London. So I'm going to take you down to the bullet points here. It says ANZ Bank's bottom line. Short-term price range, 34 to 36 an ounce for silver. Okay, this is in March 21st, springtime. This is the equinox. Key upside drivers, tight London liquidity, the U.S. import constraints, and ETF inflows. Key risks, tariff-related disruptions, speculative positioning unwinds, industrial demand slowdown, the gold-silver ratio forecast 84 to 1 to 88 to 1 in 2025. All right. So that's a little bit of a historical move for everybody. There's a couple more. So you can see the crescendo building to this tsunami of this incredible point in time where you are all living in right now. So I'm going to take you to the Financial Times here. Actually, let's go to the Yahoo Finance just a moment ago. So this is Yahoo Finance. You can see the graph on your screen. And this is just a few months ago. It says the price of silver per ounce year to date, right? So right now it's just hovering at 48 before it got on. And then that spot price could very much likely move just in the next few hours as the Asian markets open. So it didn't even show it went up to 54. Again, we're going back here on this Bloomberg article. Well, they ripped the graph from Bloomberg. That was the source, but it's published on Yahoo Finance. And here's what they said, okay? So actually, sorry, this is over a month ago in early October. Trade uncertainty has encouraged traders to invest in safe haven assets like precious metals. The price of gold has risen almost 60% this year and broke through the 4,000 ounce threshold for the first time last week. Again, we're going back a few weeks, right? October 8th. Silver is tightening, so its price rise is outpacing gold. Gold and silver prices have historically moved in tandem, but concerns over silver's increasingly low inventory levels in London compared to New York have resulted in the metal outpacing the growth of gold. So let me just check in the chat, see how everybody's doing here. Blessings from Paris. That is fantastic. Love my gold and silver. Cleabart from South Carolina. Awesome. Iowa in the chat. Hey, everybody. Yeah, Red Deer. That's awesome. Wonderful to see a lot of familiar faces. And by the way, I'll just put that link once again right in the chat. It's, of course, right down below there. So you guys can request that kit and get yourself, if you can, get yourself a free call and an advisory call tomorrow on Monday. Because again, you're about to see why $8,000 an ounce gold is extremely conservative. I'm going to show you the math. I'm going to show you the charts, and why some of the greatest financial minds that you have known for decades are saying $27,000 to $55,000 per ounce gold is possible. And we're not talking about 50 years from now. They're talking about in the next 2 years. Okay? So I'll continue on here. Carry on. Lots to show everyone, so you have this to be statistically significant and just amazing. So I want to talk about the pullbacks, right? So here's Jesse Colombo, who's talking about bubble on X, proof that pullbacks occur in every epic bull market. Now, we have seen this since the beginning of time, and in my first year of university doing economics, what I did was Harry S. Dent, boom, bust, and echo. Had to do a study on that. You know, the greatest boom, bust, echo, boom, right? You have the greatest generation. Then they came home from the war. They had kids. And then we've got to follow the bubble boom. But there's always these pullbacks when things ramp up really quickly and then they pull back a little bit to settle, and then they get ready to go again. So this is what Jesse is saying right here on this. Let me just get the item to read from you, and we're all set to go. All right. So what precious, bottom paragraph, when precious metals are moving higher, confidence runs high and investors don't need much reassurance. But when the inevitable pullback comes, the mood shifts quickly and my inbox fills with anxious messages. That's why I wrote pieces like my recent article, Precious Metals Pullbacks is no reason to panic. So we place strong emphasis on encouragement and psychological support for everybody because we're in the precious metals investing journey together. You can go ahead. I can't get behind to that. It's behind a paywall. But I will tell you this, as a guy who had to do freaking economics for like 4 freaking years, right? Is this. You have never seen in the arc of gold or silver where it has topped out at this point in time of its prices. In fact, I'm going to just show you a chart right now. So you have a 50-year chart for gold. So this is the 50-year chart for gold on the left and silver on the right. So 1973 gold chart, where you can see it at a price point. And this is live as well. This is as right before I came on. And on the right-hand side, you have the 50-year. So 50 for silver and you have 52 for gold. Okay. So look at that. Silver has never reached this high. And why is that important? Because there's no cap. Now, when we look at COMEX and we look at the entire suppression which has been happening, because we all know that the hidden hand, deep state, has been running our world, all of our countries, all of our nations for generations and generations. They're in the financial market, the medical industry, the education industry, political, government, law enforcement, judiciary. Do I need to go on and prove this? No, because you're here almost 6 years in since they launched the pandemic, scandemic, COVID lockdowns. So you know that. And what they've also done is suppressed it so they could trade with each other and trade us on the stock exchange with our social insurance numbers and social security numbers and make massive profits on it. So here I want you to take a picture of this 20-year above and below gold, silver, but gold is above, silver is below, to show you just in the last 20 years. So this is post.com bubble bust, pre-2008 banking drop, whatever you want to call that, right? Where they manufactured the CDOs, the collateralized debt obligations. You guys have seen The Big Short. Actually, you have Michael Burry image here of what he's done and placed bets, and the billionaires who've been placing bets on silver and gold earlier this year because they know what's going to come. So here you can see for 2 decades. Now, let me ask you something. For all you have investment advisors and financial advisors, have they told you to get physical precious metals, not ETFs, not index funds, not pieces of paper, right? Or physical IOUs, because that's exactly what it is in the stock market. It's an IOU. So you've got about a 300-to-1 ratio right now in the markets on precious metals, certain precious metals. So if you want to go to an index fund in Wall Street and go, oh my gosh, I'm going to buy some gold right now. I had a great show watching it with Brad. My broker said, don't go to physical bullion. No, we can just move your stuff over here because they're going to make profit on it. Otherwise, if they advise that to you, they would be fired for selling away the client. That is a freaking industry term, selling away the client. They want to keep all the portfolio in there because, again, it's arbitrage and also it's cross-collateralized investment for them, right? Look at fractional reserve banking. It's the same thing in the stock market as well. So 300-to-1. So, for example, if there's a call on those 300 investors who have bought that 1 ounce of gold, right? If there's a call and somebody just calls a broker and says, I want physical right now. And we're like, okay, we'll cash in your chip and I will send it to you. The other 299 are left hanging. That's why you want physical gold and silver bullion. Like scratch that, underline it, circle it, whatever. Physical bullion. Nothing fancy, nothing shiny, coins, nothing like that. Bullion. That's what you want, right? Because of what is coming. And you need to be able to liquidate quickly just in case, even if it was like 10% of your 100 million in a portfolio or 100,000 in a portfolio or 10% of like 45 grand in a portfolio, boom, get her done. So let's continue. A couple other things, going to go back into the news clips and I'm going to pick the speed up here with what you're seeing. Okay, so I'm going to leave India for last, the flight for India, as well as what just happened to China, which they announced on Wednesday. Okay, I'll tell you right now, they're no longer shipping silver to anybody in the world. So BRICS is, say it with me, Brazil, Russia, India, China, Saudi Arabia, and some of South America. BRICS, China, we are no longer shipping silver to the rest of the world. Whoa. They are hoarding it for themselves. So refineries in China that might have been doing international trade and shipping to international buyers and direct buyers outside of the country of China, full stop, no more export unless the state agrees to it. And this is all part of the financial Armageddon. You write that down on your piece of paper. China has stopped exporting silver to the world. Wednesday. Okay, so that was Wednesday's announcement. So they had 3 business days. What's going to happen tomorrow? The market's reacting. Who have made purchases for buying it from China, and who knows if those inventory orders are going to be fulfilled? Massive cray about to happen. Actually, I'll show you just that news because I couldn't even contain my excitement here. So here it is, rare earth exchanges, China turns the screw, new export rules tighten Beijing's grip on the world's rare metal lifeline. So now you have one of the largest, I mean, they pretty much are half the size of a continent, for goodness sakes. One of the largest countries exporting silver in the world saying, no more for you. Man, that has massive ramifications. Remember supply and demand in the desert that I was telling you at the lemonade stand? 12 people come along, 11 of them have 100. Some guy has, the 12th guy has a $500 bill, and they're selling 1 liter of water, and that's it. Oh my gosh. Imagine when that lemonade stand guy goes back to his village and even he can't get water to come out and try to sell it to the rest of the others, repurpose it, right? Okay, extremely wild, crazy example to illustrate what just happened. That is freaking massive. So I believe things are going to be thrown into a massive tailspin because now you have a huge chunk of supply removed off the playing field because China has stopped exports of silver I mean, again, we are at a time you've never seen this before in our lifetimes. And for you, for me, for our families, for our friends who are awake, who are taking advantage of this, regardless, if you have little buyers, I showed you 2 weeks ago or 2 months ago in the show on 4,000 ounce gold, 2 Sundays later or after that, or maybe it was 3, that there were lineups in Korea and certain places in the Europe to get silver. Lineups like bread lines in the old Soviet Union and communist Poland and Czechoslovakia, Baltic states, like bread lineups and rations. The same thing for silver. That was a few weeks ago. Think about what's about to happen now, and that the largest refinery in Switzerland, in Europe, at least based out of Switzerland, has declared that they are fulfilling orders 2 months from now because they can't keep up with the demand for refining silver. And again, you have that price metallorism ratio of gold to silver. So that is massive too. And on top of that, the LBMA has incredibly dropped. Now I'm going to go back to TD Securities. And this TD Securities was initiated, what was that? 9th of September. Silver supply crisis intensifies. So 60 days ago today, TD Securities warns that LBMA London stockpiles could deplete in 7 months. So that's 5 months that we have left going based on what they said. And here's what it says, what I've underlined in the very first partial sentence of the very first paragraph. Gold advanced again to another all-time high of 36.67 and 17 cents per ounce on Monday. That was 60 days ago. And it's just sitting there, just sitting there. Silver retreated slightly to $41.27. So again, on the first sentence of the second paragraph, gold's relentless ascent reflects mounting expectations of Federal Reserve interest rate cuts following Friday's disappointing job reports. Okay, third introductory sentence, third paragraph, first introductory sentence. Introductory first, bit of redundancy there, Brad. Here we go. My excitement is off the charts, everybody. Hope yours is too, because man, this is FOMO for anybody if you are not jumping on this now. TD Securities alarming warning about a potential silver squeeze. They put it together. Hashtag silver squeeze, see out there, has captured market attention with analyst Daniel Galileo highlighting that LBMA silver stockpiles could be depleted within 7 months if current demand trends continue. If current demand trends continue, that was freaking 5 weeks ago, or 2 months ago on a 5-month additional projection. And I just told you on Wednesday, China stopped shipping silver to the world, but no more. Let me also show you. Remember, I told you, be wary of what you get and how they want to put their pricing projections out there, because they all kind of have a little bit of a reason that they want to be in bed there. So let me just open this article right here for TD Securities. Now, again, they don't want to, be overly bullish. They want to be relatively conservative. So again, that news is big for TD Securities to admit that, holy cow, LBMA could be out of stock in 7 months on September 9th. Remember, I told you that these guys also have their own trades and short positions in silver. Well, here we are, October 16th, 3 weeks ago. TD Securities stumbles with a $2.39 million silver short loss amidst historic rally. TD has incurred a significant $2.39 million loss after closing a tactical short position on silver. This is a substantial setback, comes as the precious metal continues an unprecedented rally with prices soaring to levels not witnessed in decades. The event underscores the potent forces at play in the commodities market, highlighting the risk of betting against strong momentum, particularly amidst a deepening silver squeeze driven by critically low inventories and surging demand. The loss, I'll read this final 2 sentences to you. The loss serves as a stark reminder of the intense volatility and the structural shifts occurring within the silver market as silver futures have touched record highs, outperforming gold with a nearly 75% year-to-date gain. So even these guys are blown away. Again, BuddhaLovesGold.com for all of you in the States. Jump on that, get your free gold and silver kit, and only until November 30th, which is like 21 days away. So I guess we can say that's 3 weeks from now. 11% silver match. And who the frick knows if that's ever going to exist again based on their trajectory. I haven't even got to the math for the $8,000 an ounce gold, and then to show you the $27,000 to $55,000 per ounce gold projections by two of the great financial minds, at least one of you watched and known for decades. So BuddhaLovesGold.com will take you right there. Jump on that. First name, last name, your email, your phone number. They're totally cool. They're with us. They're our gold co-partner. You got the charts right here. Get after it, right? Because you've got the free gold and silver guide. I think I'm pretty much telling you why you need to have that. But also, there's a simple IRS loophole where you don't have to worry about a lot of IRS. You can do this with penalty free, right? So it's all there. You've got my image on it. You've got the backing of the Sovereign Soul Show for all of you. There are 7,000 customer reviews. Get over there to BuddhaLovesGold.com. You can hit the QR code right above me here if you're watching the broadcast. If you're listening to this on the podcast right after doing this, go right below the description, hit BuddhaLovesGold.com, go to that link, get it done. Because my goodness, you're about to see charts where, don't feel bad that you missed the doubling of gold and the nearly tripling of silver in the last 24 months, because it's going to go massively at its current projection and rate. We believe like beyond the moon, to the freaking stratosphere, to the next galaxy. And again, the suppression and the safeguards are literally off because the city of London can't control it anymore. And you're seeing that economic trade war with China where they just cut it off on Wednesday. So nothing can stop what's coming is very apropos to leverage here, everybody, as I've just shown you. And what also is happening. Now, going back to an article from Reuters, and this is not too long ago. This is just 3 days ago, Friday or Thursday. Gold rises as U.S. shutdown, tariff uncertainty lift safe haven demand. Now, this is in their financial section. You're seeing this, by the way. This article was picked up, mirrored, replicated, whatever you want to call it, to people everywhere across other places in the world, from MSN and Yahoo Finance and whatnot, because it's happening. And traders cannot turn a blind eye to this. It's happening. And I would be willing to bet, personally, I'm not a betting man, but I would think that any traders who are on Wall Street and Bay Street in Toronto and other places in London and all the other markets are going, man, I'm getting myself physical silver and physical gold bullion themselves because they can see this and what is happening, right? So I'm going to take you now to the charts. And let me just bring this one up. Actually, I want to show you the billionaires. So the billionaires I've shown twice now on the gold shows and economic shows here in the since summertime. Billionaires making a bet on gold. Okay. So here's one. Then I'll bring up the article so you can see it. Here's one where it says investor buys 2.8 billion in silver for fear of Great Reset and says that Bitcoin will lose value. So who is this investor? Let me pull up the Substack for this right now, because you'll even see it, as I've shown before, on his own Twitter X feed when he did this back in February. So you can see that there, a $2.8 billion bet in silver for fear of Great Reset. So this guy used his own capital. And it's one of those kind of unheard of billionaires who was awake, like all of us, and was fired from his own company because he disagreed with mask and jab mandates. So the guy built his company, CEO of it, and just like the board did to Steve Jobs when he built Apple, they kicked him out of his own company. This guy removed from his company. So we went, all right, well, here's a big FU. So here we are. Dark night of silver. Meet the billionaire betting 1 billion on monetary collapse, but 2.8 billion. So between the articles I've been able to parse together along with him, He made a 2.8 billion silver, and 1 billion of it was in silver. All right, and then you're going to see it right here. So who is David Bateman, and why is he hoarding 12 million ounces of silver as the $300 trillion debt bomb clock clicks April 26th, or excuse me, April 12th of this year, right? And as he said, some men just want to watch the world burn, others buy silver. Okay, let's get this little pop-up. So meet David Bateman, not Bruce Wayne, but close. He's the billionaire tech founder of Entrada, and now apparently the newest self-styled guardian of sound money. And if his recent moves aren't any indication, or are any indication rather, he's not waiting for the collapse, he's positioning for it. And then it goes on to say, in a tweet that feels more like a financial manifesto, Bateman casually revealed over the past 6 months, he's invested close to 1 billion in precious metals, including the purchase of 12.69 million ounces of silver, roughly 1.5% of the world's like central bank on its own, right? That's not a buy, it's a declaration of war against the fiat system. Bateman's tweet dropped at the perfect moment, right in sync with the Silver Squeeze 2.0 on March 31st, 2025. As expected, the internet exploded with memes and hype. There's a meme. There's another meme, Silver Party. Pretty funny. I like that one. That's great. Jumping into a boat. And then it goes, let's unpack his reasoning and why it's sending tremors through both Wall Street and the underground vaults of London and Zurich. Here's the tweet, and I will read it to you from him verbatim. Here are reasons I invested close to $1 billion in precious metals over the past 6 months, including the purchase of 1.5% of the annual global silver supply at 12.69 million ounces. The global monetary system is about to collapse. The Great Reset or Basel Endgame. The biggest credit bubble in history will soon pop, 300 trillion. There is no way the US can refinance its 28 trillion in maturing treasuries in the next 4 years without an obscene amount of printing. Trump tariffs are hastening the collapse, and it's by design. Gold and silver are the only meaningful life raft. Physical possession is everything. The whole world right now is a sophisticated game of musical chairs. The chairs are precious metals. I mean, this is amazing what he wrote. He continues, in his belief, crypto is a psyop. Those who purchase will have no chair when the music stops. Real estate, crypto, stocks, and bonds will all lose significantly compared to precious metals. Absolutely, because again, backed by fiat going into anything, and unless your crypto is a real digital asset backed by actually something tokenized on physical, that's it. It's worthless, isn't it? Right? The value is only created by the people who say it's worth something. Then he continues, the banking system has been meticulously designed to seize your assets, to buoy up a collapsing banking center. See the great taking. You have zero counterparty risk with precious metals. I'm up 20% already on most of my purchases. This is not a drill. Your grandkids someday will either muse or lament this financial decision you're now faced with. Don't fail them. Not financial advice, for educational purposes only. Hashtag Silver Squeeze. And there it is, an image of a whole bunch of crates of massive bars, March 31st at 8:30 a.m. of this year, the tweet that roared. And so just incredible, right? And he's continued to acquire more from what I have seen. And again, I'm not a financial advisor or an investment advisor. I've never played one on TV. I've just been, one of those guys that says it's black, it's white, this is right, this is wrong. Here's what I would do. I would not wear a mask. I would not take a chemical, biological, radiological, gene editing, mRNA weapon of mass destruction. And let me just warn everybody about that. And here it is, right? God wins. Amen. So again, if you are here right now in the States, I want everybody to take a moment, because I'll play that clip for you from Trump once again, and go to buddhalovesgold.com or click the QR code, because look, this is exclusive just to Sovereign Souls only for the month, and we only have 3 weeks of it left. When you open a qualified account with Goldco through that link, you're going to get 11% silver match. So what does that mean? If you got like savings of $100,000 or an IRA of 100, then you could get 11 grand in free silver from Goldco, but it has to be locked in the next 3 weeks, including direct purchases, right? So it's a simple way that they're giving back to people who are sovereign souls. And again, if you're in other countries, but you have a US dollar bank account, like TD Canada can have a TD US bank account. You can make those purchases out of there as long as it's a US dollar account, and then you can do that. But you got to act fast because, again, this is gone on November 30, like 21 days. And, opening an account, right, just quickly doing the paperwork, right, that takes several days just to get that done in order to move forward with the purchase. So I highly encourage everybody freaking get there right now, get it done. Here's DJT before I go to the charts and graphs and the math showing you 8,000 and the date conservatively of when, very, very shortly, gold will be $8,000 an ounce. So listen to DJT here for a moment.
Is better than cold, hard cash.
We all know what's happening to the dollar. The dollar is going down, and it's not a pretty picture, and it's not being sustained by proper policy and proper thinking. This was an opportunity, and maybe an opportunity to show people what's happening with the dollar so that we can do something about it.
Okay, so that's Trump, right? And let's take everybody back here, what he said right here. The golden rule of negotiating and success is he who has the gold makes the rules. Thank you. Thank you for your attention to this matter, as he's so well known for saying, right? So again, the golden age is here, and that's exactly where he is at. So let's talk about the gold spot price projection per ounce. I'm sure everybody is ready for this. And just by the way, people have asked me, Goldco is ranked in 2024 one of the best money companies, or actually the best money management company, IRA gold company, excuse me, in America. So that was for 2024. So that's pretty amazing. And we're very fortunate. And I know that we've had people, the Sovereign Souls, who have went with them. It's been awesome. There's their image, by the way. Best gold IRA companies, best customer service, freaking awesome. So we're really happy with them and everybody who has jumped on board. Physical gold, physical silver, that's exactly what you need. That's what you want. And let us continue on here with the charts. Now, I showed you the chart for 50-year gold. Okay. And once again, if you need that, let me just take you right back here so you guys can follow along. Maybe you're choosing to take screenshots, write this down. Extremely important, because your grandchildren, great-grandchildren, and your great-grandchildren's grandchildren will be talking about this time for many reasons, including the financial Armageddon, when the positive reset in God's timing, which is happening and going forward right now, thanks to the Trump administration, right? I showed you the 20-year silver and gold performance. So you have, in the last 20 years, silver is up 534.44% today. Where can you get that in the stock market? You can't. You can't own something in the stock market that you have physical ownership of. You can put it in your closet, bury it in your basement, put it in your gun safe, whatnot. Or 20 years, silver, 766.1%. Yeah, sure, they're outliers, but just for the average people, where we're doing our best to save our family, save the children, get by, protest, be out there, write Torontos, you name it. We're not sitting behind a desk getting paid $500 to $1.5 million a year as an economist and have all these Bloomberg terminals that tell us everything in arbitrage, and we're not in the club. So, it's extremely difficult to get that kind of a return on something that you own. It's about to go to the stratosphere. About to go to the freaking stratosphere and into the next galaxy. So I was crunching math. And in economics, I remember my nemesis was calculus. Show of hands here. I'm not that I can see you, I guess, but how many people enjoyed calculus in high school? So in honor for me to qualify for the honors economics program, remember I was doing that because I wanted to fly an F-18 at Royal Military College. So you had to have at that time 105% out of 100% percentile. So you had to be, pretty much like a grade A, AAA student. I don't know what the American rankings were, but you guys remember that are Canadians when we had OAC, Ontario Academic grade 13, in order to go to university. That's what I had to do when I was in the Royal Canadian Air Cadets. I want to fly F-18s and do all that and go to the physical. And of course, I had everything to go through with the acceptance and one of the 5 in the program, but didn't have 20/20 vision. And they just said, nope, we're not going to invest in laser surgery for you. And I'm like, what do I do? All I wanted to do was, make or be in films and movies, make them and be in them, or fly fighter jets. So I guess I'm in the Army now. And that's what happened, right? While I was still going off. I had all of this for honors economics degrees, but you guys don't have to worry about quadratic equations. You guys don't have to worry about calculus, because write this down. October 21st, 2023. I just felt a day going back 2 years ago. And went 750 days ago from today is October 21, 2023. Just felt like a very apropos day. 75, so 750. So on October 21st, 2023, then I punched it in, because this math, and here is your calculation for everybody to see, take a screenshot of, hold their phone right up to it, whatever they want to do, of this quadratic equation. I used CAGR. So what is CAGR? And you're seeing it right there, right? Well, that's the compounded annual growth rate from the past 750 days. So what did I do? I used Grok on this one, because the financial formulas were just too great for me on my normal iPhone computer. And so what I inputted to Grok was this. I said, Grok, go back 750 days ago from today's date. Tell me what the price of gold is. From that price of gold at that day until today, calculate the compounded annual growth rate without accounting. So he took that. And then I said, and calculate and tell me when gold will be $8,000 per ounce based on that growth rate, without accounting for rallies, without accounting for any supply and demand. Because what AI will do is they'll go look at Reuters and this article and that article, be like, well, based on this and this and this, and they will flood the numbers based on all of that. So in economics, we have something called ceteris paribus, all things being equal, to remove any of the variables as much as possible and just look at our current trending path. So over 750 days, what was the daily per ounce growth rate of gold for 750 days? So we get that factor and we sit here and we've got a compounded annual growth rate as to when it's going to reach $8,000 per ounce without any supply and demand issues, without accounting for any market rallies and emotion. Just let's keep it at math, black and white, extremely conservative based on those calculations. Ladies and gentlemen, congratulations, because you saw it right there on the screen. And you can go right down to the bottom. Write this down, September 18, 2027. On that date, in the future, 22 months from now, is when gold, at a steady growth rate of just that, conservative growth rate of 44.8% annualized, spot price will cross $8,000 per ounce. There you go. There you go. So in great. So now what I want to do is I want to apply that to silver. And you guys can go ahead and you guys can take a look, a picture of the chart, because then I plotted it on a chart for all of you. So you can even see it rather than just the graphical formula. Hang on a second. I have to take actually another screenshot of the chart because I have so many windows open. So pardon me, sovereigns, as we get it done. And let me pop that in so you can see this right now. I'll go back to the desktop and snag that for you. All right, you guys, enjoy. So 750 days ago, gold was 1985 and 80 cents an ounce based on Grok, even though we said it was 1969, I guess, at the close in the beginning of this broadcast. And that was on Google. So you got Google, Grok, whatever. And $8,000 per ounce, September 18, 2027. There you are. That's conservative, right? 100% conservative based on the evidentiary growth of the last 750 days since October 21st, 2023. So you're like, Brad, holy jumping. This is freaking amazing. I'm going to go get gold and silver bullion right now. I'm going to get it shipped to my home. I'm going to get those gold go guys. I'm going to get an 11% silver match. So yeah, and I say absolutely rock it out. Get it freaking done. Before I show you why some people are saying it goes to $22,000 to $27,000 to $55,000 an ounce for gold. Let me show you this now. So what is silver? Based on all of that math, all things being equal, ceteris paribus, once again. So here's your milestone. Silver on October 21st, 2023, 23.50. On November 9th today, 48.52. Current price, the end of 750 days. On November 9, 2026, a year from now, $70.85. That's your one-year projection of 48.52 times 1.59% growth rate. A compounded annualized growth rate. And then on September 18, 2027, when gold is $8,000 per ounce, based on that mathematical model I showed you all earlier, $114 per ounce. $114 per ounce. This is without, you take a screenshot, let it rip, go for it, sovereigns. This is without any rallies. This is without any supply or demand interference based on the average rate of growth of the last 750 days of the silver price, spot price in US dollars. And why are you about to go, my goodness, I'm so stoked. Thank you so much, Brad, for this free show. This is freaking amazing. Even if you've got like $50 that you can throw at this, I say get it done wherever you can. Because yes, billionaires are buying gold. And now you can take a look at this price. This article is from January 25th, this year. This article shows that silver vaults are getting ransacked. And they're basing it off the Buffett strategy, which creates the three indicators for a perfect storm in silver and gold. What you're seeing there is based on the LBMA movements from the past 3 years. The vault will be dry by 2028. That is physical silver in the underground and above ground vaults in the city of London at the LBMA will be wiped out by 2028. No supply. And this was in January. So let me read to you what this says, okay? Very top line in bold. The silver vaults are getting ransacked. Of course, Buffett considered, get weird, it was an article about Warren Buffett and LBMA that I pulled up, and I'll show you the next step to this article here in a moment. Of course, Buffett considered secondary silver supply as a solution to the deficit. In quotations, there are enormous quantities of silver above ground that could conceivably add to supply. But he quickly observed that those inventories were falling materially. And once again, the major vaults have been quietly hemorrhaging silver for years. That's in italics, for years. From 2021 to 2023, COMEX. Now, COMEX is the Commodities Exchange, everybody, which is part of the Chicago Mercantile Exchange in freaking Chicago, says COMEX depositors withdrew a third of its silver. So in 2 years, its depositors withdrew a third, 120 million ounces of silver. It goes on to say, and from its peak in 2021, LBMA is down more than 400 million ounces. So you can see from, it looks like in 2021, 1.1, I would classify that as billion, down to 700 million in January 2025. Okay, so remember, supply and demand. Those are the key concepts and cornerstones of economics, right? And once again, here's what you see at a conservative estimate and what's going on. So here's step 2 from March 2025 article on Discovery Alert about Buffett. The 3 key indicators that Buffett used for the last time in the 90s that he bought silver, and he just like went out and made a killing back in the day for Berkshire Hathaway. So here it is. I'll read it to you. You can take a screenshot of it. Please do. 3 key indicators Buffett used. 1, Buffett's silver investment strategy, this is in the 1990s, hinged on 3 critical market indicators that signaled a potentially explosive price situation developing. 1, persistent supply deficits. What did I freaking just tell everybody that we've learned about China on Wednesday? Stopped exporting silver to the world on Wednesday. That's it. And what did you see about supply in LBMA? They're down 400 million ounces by 2025 this year. What was TD Securities telling you about LBMA on September 9th, 60 days ago? Oh, LBMA will be out of supply in 7 months. They have 5 months left based on those indicators, and they didn't even know that they could be backstopped by China's supply. So if they're relying on China to supply them, to backstop them and their inventory to ship out to the world, they are fucked. That's it. They are hosed, and that means amazing explosive in prices for those who own silver and gold, and I'll get into the gold coming up. So let's continue here. Number 2, declining above ground inventories. Well, you got supply deficits, and now you have declining above ground inventories. Major vaults were showing material withdrawals, which I just covered, right? We just shared that example of COMEX. A third of its silver depositories have been withdrawn in 24 months from 2021 to 2023 in Chicago. And LBMA, 400 million. They're down a third, right, in those 4 years. So it says major vaults were showing material withdrawals as storage silver was needed to meet industrial demand, depleting gold reserves. And 3, finally, limited production capacity. Few primary silver mines existed, making it difficult to significantly increase supply in response to higher prices. With approximately 80% of silver coming as a byproduct of other metal mining, production couldn't easily ramp up solely based on silver prices. These 3 factors created a market environment where inventories were steadily declining without a clear mechanism to quickly restore balance, setting the stage for a potentially significant price adjustment. End of story. So let's look at limited production supply capacity. What did I share with you just moments ago with regards to Switzerland? What is it? Herius is the name of the refinery. They've reported that they can't fulfill for at least 2 months. So if you are going to order silver from them today, they're going to refine, take it out of the ground, melt it down, smelt, refine it, ship it out to the institutional buyers, to the depositories who are buying and holding for their clients, etc., and the massive brokers, you name it, hedge funds, the David Batemans of the world, maybe, and the Buffetts and Berkshire Hathaways of the world. You buy it from us now, you'll get it in 2 months. So we have a perfect storm, a perfect freaking storm with the silver squeeze. And also, how does that translate to gold? I mean, you could just be a 5th grader and you can see what's going to go on there. If you've got black marbles, white marbles, and you got a shortage of, white marble production, people want more of that, and you got some black marbles over here, and they're tied to it with a certain ratio. What do we have for metallurism in the United States? What has President Trump said that he's doing? We're turning to the Constitution. We are turning to the Constitution. He's continually quoting and citing things that helped with trade wars and tariffs and policies to protect Americans. He is here to defend, protect, and preserve property and life of America. He's also with the Monroe Doctrine, which is protecting the entire Western Hemisphere. So he can go back and he can leverage in 1930 the ability to instill tariffs on any country for 15 days at whatever price he freaking wants to bring them to the table. And this is like the ultimate big bears, right? And who are the 3 superpowers in the world right now? Russia, China, America. Yeah, India by volume. And we haven't even talked about India yet. And I'm going to be getting to that. Still coming. Like, this is freaking incredible what has been happening. So I heard just yesterday that India is reevaluating its silver and gold to 10-1. So metallurism in the United States under the Philadelphia Mint Act of 1792 is that constitutionally printed money, silver, gold in America, then at the Philadelphia Mint was to be at holding at a reserve price that stabilized it at 15-1, right? 15 ounces of silver for every 1 ounce of gold. That's where it needs to be. And now we're at like 84-1, and it goes up and bobs and weaves. So if that's true, if India revaluated its own price of gold and silver yesterday off of the markets, which are that 84 to 88 to 1, and they made it 10 to 1, and silver's at 48 bucks, that means that tomorrow, if that's true, the market will open in India at $480 per ounce of silver. Now, to me, that's a little bit crazy. Maybe that's true or not. But let me show you what has been happening in India. And this is in press, right? We know that, again, they have over 1 billion people. Not all of them have the ability, of course, to go ahead and buy silver and buy precious metals. Yet you have a lot of people who can buy something, right, outside of the poverty circle, that middle class, and especially that upper middle and that high income class in India. So what we see there going on, and here is from the Economic Times report about Indian investors flocking to silver as returns overtake those from gold. So now what you're seeing again is, hey, we're going to get into silver because gold price is kind of settling and it's going faster right now at this point in time. And you know that this is driven in the background. It's got to be driven in the background by some people who know what has been going on. By the way, this is from July of this year. July. So remember in July, I was doing these shows about where gold's going, where silver is going. People are getting positioned. People got in at $38 an ounce silver. Like, wow, when would it be 40, 42, 45, 50? You know, we were saying like by the end of summer, it's due to go to 50. And the suppression keeps coming off. So let me show you another article here from India. And, oh, this is Financial Times. Okay. In case you all missed it, and, you know, I was doing a lot of shows this week, and I missed this too. What the Trump administration has done beautifully is, it says I've got too many things on the screen to share, so let me pull a few things off here on the share and put it in there. What the Trump administration did beautifully, you tell me if you think this is going to drive the price up, is they have added silver and copper to the critical minerals list. So from a strategic standpoint, and to safeguard silver supply, because it's an industrial precious metal as well. It's used, so NVIDIA that makes all the AI chips right now, it's currently has a market cap larger than Google and Microsoft combined. NVIDIA making all the AI superconductor chips. It uses silver. Microsoft uses silver. All the defense contractors, Lockheed, Boeing, Northrop Grumman, you name it, they use silver. So it's an industrial, and it's also strategic to safeguarding America. So it's just been added to the critical minerals list. So do you think now that China went on Wednesday, we're not exporting silver, and the Trump administration said, all right, Thursday morning, boom, silver's on the critical minerals list. And we saw earlier that massive refinery story in the summertime, massive refinery in Switzerland wants to open a gold refinery. That was actually Halloween, October 31st, right? Gold Telegraph wants to open a gold refinery in America. So that economic national security. So what is NESARA, remember? National Economic Security and Reformation Act. We are going through a reformation right now of the financial system to bring everything to bear. And yes, while there are extremely high foreclosures in the United States right now, there's 30, I just checked the stats today. There's a reported 34.7 million who are in poverty, and over 750,000 who are homeless. And Trump brought in on Friday 50-year mortgage rates to try to make housing affordable. And he's dropped inflation, as he reported this week, to 2%, which is historic. And he's only been in power as 47 and doing these policies for 9 months. So you can see everything lining up to have your gold-backed currency and precious metals and silver once again. And here's that article on Financial Times. Silver has just been added on Thursday, and this was published on Thursday, November 6th, to the critical minerals list to leverage in the trade war and leverage to protect property, life, and allow America to prosper. Incredible. Incredible. And so now let me talk to you about the billionaires still investing, right? And again, it is absolutely incredible what is going on because we're living in a time that we've never seen before. And there's no way this is going back to your little measly $22, $50 an ounce silver, or your, like $4,000, $5,000, $8,000, $10,000 an ounce gold before we see the decade come out. So here we are. Let me take you over here to Ray Dalio. Now, Ray Dalio had said earlier, and I had showed this in the show in September, that silver and gold was a way to hedge against the markets, the instability. Actually, let me pull this up here for you right now and pop that in. Stand by. Sometimes I know this stuff off the back of my hand, and I just start saying, I'm like, okay, I better show a clip like that. That'd be great when we have producers and all that kind of stuff. So here you are, September 11, billionaire Ray Dalio suggests gold as a shield for U.S. markets at risk of a heart attack. 100% heart attack. Why? Because the AI craze and the AI bubble pop. Michael Burry, The Big Short, just put it. Remember The Big Short movie, 2008? He called the CDOs, he called the bank failures, and he made billions of dollars betting against them. Well, he just put a $1.2 billion bet against AI, and the stocks dropped because it's just hyperinflation in the markets. It's the tech bubble that I lived through, many of you lived through in early 2000s, saw it at RIM. Then we saw 2008, then we saw 2015, and we've all lived through the lockdowns in 2020, and here we are. So let's also take you over to the open source information continually about Buffett and Ray Dalio. So this has a lot of pop-ups, so I'm not even going to go through this very much, but this is November 2nd. This is on the Motley Fool, which is pretty awesome. And on Motley Fool, key points. Gold is outperforming the stock market by a wide margin in 2025 with a 48% year-to-date gain. By the way, gold has outperformed the S&P 500 just this year. Silver's higher. So gold, precious metals, has outperformed the S&P 500 index. And any of your financial advisors and investment advisors who are getting paid like maybe $1,800 a month on your own portfolio as a percentage of the portfolio that you have in there, what are they doing about that? Are they making sure you are in physical gold and silver and have made that amount of incredible profits with your money working hard for you while you're still going and working hard for more to come in? Then it also says, investing legend Warren Buffett has deliberately avoided gold throughout his career, calling it an unproductive asset. Well, we know who Buffett was besties with and he played bridge with, right? Bill Gates, all the time. It says here, hedge fund titan Ray Dalio, on the other hand, recently told investors to park an unusually high percentage of their portfolios in yellow metal. And that was gold, right? So here you are. Then it goes back and forth, and it's a great way to get eyeballs, clickbait for everybody. Bottom line, Buffett made a ton of money betting on silver in the 90s. He made $500 million on that investment very quickly. We used the 3 key leveraged assets that I showed you earlier, that we were in the perfect storm, silver squeezed. It'll do it again. Ray Dalio is saying it. David Bateman's doing it. Get others doing it. Michael Burry's making a short bet on AI. It's going to drop. He's crushing it. So many others are crushing it too. And you only have 3 weeks, 21 days left to bank on 11% silver match from Goldco at BuddhaLovesGold.com. So I'm going to play this real quick commercial for all of you right now because we're almost an hour and 24 minutes in. Then I'm going to come back and show you who is saying $27,000 gold and $55,000 gold in the next 2 years. Yes, and they're Americans. So here we are. Stay tuned for this. And again, you might see an amazing President Trump here talk to you about the silver and gold. And one other thing that we want to mention as well is for anybody who's outside the USA Inc., if you have a US dollar account at a bank that is in the United States, like a TD Bank, Royal Bank, and other ones, maybe ANZ Banking, I don't know, then you can actually make these purchases through a Goldco and take advantage of this offer to qualify for it. So stay tuned. Here it is. I'll be right back in 120 seconds. All right, you sovereign souls, now is the time to protect your money with gold and silver if you already have not. And if you are and you have a chance to do so, I highly encourage to do so even more, because gold and silver will launch the golden age, which Commander-in-Chief Trump has continuously referenced.
The dollar is going down, and it's not a pretty picture, and it's not being sustained by proper policy and proper thinking. This was an opportunity, and maybe an opportunity to show people what's happening with the dollar so that we can do something about it.
Get some if you can. BuddhaLovesGold.com will take you to our partner Goldco. They have over 6,000 five-star reviews. This is why now is the time to buy gold and silver, because we have thousands of Americans buying gold today. The rising inflation has reduced our purchasing power. Dysfunctional politics don't work for us. The US dollar has lost over 97% of its value since 1913, while the price of gold has increased over 9,000%. Silver has fared well against the dollar too, with the silver price increasing over 4,500% since 1913. It's about wealth protection. Physical precious metals act as a hedge against dips in volatile markets. Go over to BuddhaLovesGold.com. That's www.BUDDHA, BuddhaLovesGold.com. You will download your free silver and gold guide today, and our great people over there at Goldco will take care of you. That's BuddhaLovesGold.com. You'll see a picture of me right on there, Brad Wozny. And once again, BRICS is the new financial system. Asset-backed precious metals is the way of the future. This is about financial control. Diversifying your assets with gold and silver puts you in control of your wealth at BuddhaLovesGold.com. All right, now as I've said, that says 10,000 free silver. That was last year. It is 11% silver match on qualified accounts just for the next 21 days until the end of November. So hit that link, BuddhaLovesGold.com, under the description or in the chat, or scan the QR code right above if you're watching this broadcast, and get after it. And you will be very, very happy, in my opinion. So Kiyosaki is saying $27,000 gold in 2026. Now he's saying Bitcoin will go to 250,000. But another reason to listen to this is many people don't know Robert Kiyosaki, of course, famous for Rich Dad, Poor Dad, and the investment methodology for single family homes and real estate investing, and then in financial investing. Many people don't know three incredible things about Kiyosaki. Number one, he's a U.S. Marine, combat Marine in Vietnam. So thank you for your service, Robert. Number two, he owns gold and silver mines. He has gold mines in Utah. So number three, people don't know he's also a friend of President Trump. They've been friends for decades. So President Trump administration just made silver listed on a critical minerals list, important to the national security of America. And one of his friends, Robert Kiyosaki, a U.S. Marine combat Vietnam veteran, owns gold mines in Utah. You don't think that this man might know a little something? So here it is, $27,000 an ounce gold next year. So when you go back to the chart, which I showed you at the conservative rate, where I said to Grok, give me 750 days ago, took us to October 21, 2023. For gold and silver, give me all the way to today, give me the compounded annual growth rate for gold, for silver, then project into the future for gold at that growth rate without rallies, without volatile market conditions or variables or supply and demand problems. Just at that current projection, when would it hit $8,000 an ounce gold? September 18th, 2027. And then I did the same with silver, and you saw that. Well, what would silver be on that day? $114 per ounce. Okay, now you've seen supply and demand crises. You've seen the perfect storm of silver, and now you're seeing Kiyosaki at $27,000 an ounce next year. And I already talked about 1930s and the tariff capabilities that President Trump has as wartime commander-in-chief, which is actually part of his constitutional ability to move forward and conduct trade wars using the tariff system and what he has in his power, right? Well, here you are is gold revaluation charts from Kitco that could be upwards of $55,000 per ounce. And I've highlighted here for you on the screen. And this is just a few days ago. And it says, from precious to critical, silver's new status could reshape its global supply chains. Okay, $55,000 an ounce gold is possible. So I've highlighted it just right below here in this article. It says, robust industrial demand has created substantial supply deficits in the silver market for the past 5 years, depleting above ground stockpiles to critically low levels. So then what we've got is, I need to get back to the screen here to share with you the second part of this article, and scrolling it down that I've screenshotted for you to highlight it is from their economic analyst. Let me take this one off the screen because it's almost limiting me. Yeah, there's too many issues with your files on there. Remove that one from the studio. Let me see. Okay, we can get that one in. That's great. I just read from that. Let's get the other one in here. Slow pause, slow roll. If not, I'll take another screenshot. We'll get this done, everybody. Yeah, it's not letting me load it. Okay, so I'll just repeat what it says below. So it goes further down where the advisor at Kitco says currently the value of U.S. gold reserves is about 2% of those treasuries outstanding, compared to roughly 17% in the 1970s and close to 40% in the 1940s. So remember earlier in the show, I showed you that if just 1% of the wealth, or 1% of the wealth in treasuries move to gold, it actually causes a $5,000 per ounce gold price. And then he's talking about the value of U.S. gold reserves as 2% of those treasuries that are outstanding right now in the U.S., compared to 17% in the 70s and close to 40% in the 1940s. So let me see if I can take a screenshot. I really want to share this with you. I'm actually a little bit late to our Doc Talk Zoom call right now, but I want to get this part done so all of you have just an incredible, not only story, you can see the concrete evidence of this history, which you're living through right now, is absolutely glorious for those who take advantage of it. Here we go. Perfect. It's up and ready to go. So I'll continue reading this for you. Highlighted. And if we're going back to 17%, that in the 1970s, it takes us back to $25,000 an ounce gold. Or if we go to 40%, which was in the 1940s, it's close to $55,000 an ounce. Cost to explain, noting that these are not price targets, but serve to illustrate the potential for significant valuation shifts. He pointed out that central banks have been accumulating gold at 50-year highs since the global financial crisis, while U.S. gold reserves are at their lowest levels in 90 years. This divergence, Costa suggests, could pressure the U.S. to reconsider its gold policy. Not only reconsider it, we know exactly where it's going. So he continues on in the third paragraph. Costa also expressed strong concerns about the overvaluation of the U.S. dollar, Federal Reserve dollar, which, by the way, is down 96% from 1913, right? Stating it is likely at its peak and at its most overvalued levels in history versus other currencies. He drew parallels to historical instances of dollar devaluation, such as the Plaza Accord 1985. Everybody remembers the OPEC gas crisis coming around in the Carter administration. The events of the 1930s, what we do know is that the dollar is at its peak, most likely, and that's a key part of it. So as an investor, you think, what do I do in that scenario? He said. He suggests the weaker dollar would be a green light to a lot of asset classes that have been ignored for a long time, including emerging markets and natural resources. And of course, like multi-billionaire Ray Dalio suggests, gold is a safe haven for the crash. You saw that from David Bateman. Entrada making that $1.2 billion, $1.1 billion purchase of 12.969 million ounces of silver squeeze, and he continued to do that. We have it that gold shall destroy the Fed, that the golden age is here, as President Trump has been saying, everybody. And we know what President Trump is doing, and he posted this on Truth Social on April 20, 2025, the golden rule of negotiating and success. He who has the gold makes the rules. Thank you. We are in a time that you will never see again, from the standpoint of gold and silver prices being this low. Even though it seems dramatic when you look back 750 days ago to October 21st, 2023. And I just showed you the very simple, easy math based on 750 days of gold growth to 8,000 an ounce by September 18, 2027, conservatively, without market rallies, without supply and demand fluctuations or variables, and without the fact that China just stopped shipping silver, exporting it to the world on Wednesday, and without the fact that America just made silver and listed it a critical asset to national security. Sovereign souls, you know what to do. Get to BuddhaLovesGold.com. Thank you so much for being here. This is winning around the world. And again, if you're outside the US or you don't have a US dollar account to participate, I guarantee in South Africa or in Australia or where we might be, like in Sweden, we have amazing people from Sweden who will watch your incredible souls, that there are gold or silver dealers where you can lock in and get physical precious metals there now, hopefully without standing in lines, based on what you see, based on what's coming, based on the big player moves, not only just institutional investors, but at the level of superpowers of nations. Just in this year alone, we have seen what's been reported up to 1,000 tons of gold, which have been purchased by central banks around the world. It goes from Russia, who also purchased billions of dollars of silver in June of this year and gobbling it up, all across the board. So it's a great time to play in it right now. Tomorrow, I've got some incredible guests coming on, and Tuesday, Wednesday, Derek is back, and have some incredible guests as well coming up here in the next few weeks. God bless you all. All right, you sovereign souls, now is the time to protect your money with gold and silver if you already have not. And if you are and you have a chance to do so, I highly encourage to do so even more, because gold and silver will launch the golden age, which Commander-in-Chief Trump has continuously referenced.
The dollar is going down, and it's not a pretty picture, and it's not being sustained by proper policy and proper thinking. This was an opportunity, and maybe an opportunity to show people what's happening with the dollar so that we can do something about it.
Get some if you can. BuddhaLovesGold.com will take you to our partner Gold Co. They have over 6,000 five-star reviews. This is why now is the time to buy gold and silver, because we have thousands of Americans buying gold today. The rising inflation has reduced our purchasing power. Dysfunctional politics don't work for us. The US dollar has lost over 97% of its value since 1913, while the price of gold has increased over 9,000%. Silver has fared well against the dollar too, with the silver price increasing over 4,500% since 1913. It's about wealth protection. Physical precious metals act as a hedge against dips in volatile markets. Go over to BuddhaLovesGold.com. That's www.BUDDHA, BuddhaLovesGold.com. You will download your free silver and gold guide today, and our great people over there at Goldco will take care of you. That's BuddhaLovesGold.com. You'll see a picture of me right on there, Brad Wozny. And once again, BRICS is the new financial system. Asset-backed precious metals is the way of the future. This is about financial control. Diversifying your assets with gold and silver puts you in control of your wealth at BuddhaLovesGold.com.